Where are we in the market? How does this compare to previous cycles? And how does that compare to your expectations?
Do you want to start with that?
Yeah, that's the first question. I'll start high level and then I'll slowly dig into the different asset classes.
This is a technology that is the new layer to the internet. It's not just about tokens. What's unique about this technology is there's token incentivization built in, which is why these networks bootstrap so fast. It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalancing.
Raoul Pal's latest prediction about crypto entering the banana zone marks more than a forecast. It signals a transformative shift in the global financial system. He explains that cryptocurrency markets follow cycles driven by massive liquidity injections, often tied to refinancing government debt. These cycles, winter, spring, summer, and fall, are predictable, but Pal cautions that the true game changer is approaching. With the fusion of AI and blockchain, the crypto market is poised for a meteoric rise, and the banana zone represents the explosive phase where the industry reaches $100 billion and beyond. Pal envisions a future where the blockchain industry, currently valued at over $3 trillion, continues to grow at double the pace of the internet's early expansion. If this trajectory holds, the crypto market could reach a staggering 4 billion users by 2030. In this era, AI is expected to surpass human intelligence, powering decentralized markets through algorithms and rendering traditional financial systems obsolete. This convergence of technologies could ignite an economic revolution of unprecedented scale, reshaping industries and economies worldwide. Pal's message is urgent. Adapt or risk being left behind as crypto enters the stratosphere. The banana zone represents the future, a tipping point where trillions of dollars are at stake, and the pace of innovation accelerates beyond imagination. As this shift unfolds, the opportunity to participate in the next wave of economic transformation is now.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I'd love to see everyone there. Peace out.
This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debts, this is driven by everything I call the everything codes and work that I did showing that every 4 years governments need to refinance their debts, and what they do is inject massive liquidity to be able to do it and try and get interest rates lower. So as we do that, it creates a perfect 4-year cycle. And it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down, people don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is year 3, same year as the election cycles. And then we go into macro fall or autumn. Crypto,
When if we were trying to time
beginning
it.
of the year. So it's just an annual cycle.
When do you say?
It's the beginning of the year, we go into the next autumn,
Okay.
the fall or the autumn cycle. That's usually the most explosive.
Beginning of next year.
Yeah, and that's usually the most explosive. So summer starts to rip, and then we hit what I've called the banana zone, which is when everything goes banana.
And how long will the banana zone last for?
That depends on global liquidity. Normally it lasts until about November because of this cycle. It lasts until November, and we have different structures of these cycles. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit and then it rips at the end of the year. Last time it fell 50% over that period in 2021, and then it ripped, but it didn't really extend, and everyone kind of got caught out by it was double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle. But thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. So that will be much higher price than everyone expects. Most people have PTSD from the last cycle. And they don't want to overextend themselves, and they're worried that they're going to be caught holding the bag, which usually means they'll sell early because the markets give as much pain to the most number of people as possible. Why in 2021, everyone's expecting 2017 to happen.
Yeah.
It doesn't. Maximum pain. Let's say we're towards the end of 2025. The US economy and the global economy's picked up. What happens is inflation usually picks up a bit and the central banks start raising rates or tightening liquidity in some form. And that slows down 2026. Doesn't mean we get a recession, but we get a slowdown. So unless we change that dynamic, there's no reason to believe the 4-year cycle won't keep repeating. It'll stop being repeated once we break the root cause of the problem, which is demographics. You go on X and ask people where do they think Bitcoin peaks out. My guess is most answers are 150,000. Well, it's 93,000 as we're speaking. And that's not very, and most people are worried that it's going to peak early. So the PTSD, the collective trauma, is it's not going to go as high as you expect. I need to sell early to take some chips off the table.
Yeah.
And that's when normally you get a correction, everyone says, thank God for that. And then it rips and everybody's calm.
So I got it.
And I've seen that so many times. It's like, oh shit, I sold too soon.
Raoul Pal foresees a banana zone of rapid growth in the crypto market, potentially culminating in a blow-off cycle with prices exceeding expectations, driven by political shifts and liquidity surges. However, he warns that without fundamental changes in debt management and demographics, this cyclical pattern will persist, shaping market dynamics and investor behavior, especially given the lingering impact of past market crashes. Pal asserts that Bitcoin and cryptocurrencies represent the greatest macroeconomic opportunity of all time. Since 2012, Bitcoin has delivered an average annualized return of 150%, despite its notable volatility. He and other macroeconomists now view crypto, particularly Bitcoin, as the defining trade of their careers, surpassing the potential of traditional markets. This positions crypto as a revolutionary asset class with unmatched growth potential. He also highlights liquidity challenges in the crypto space, noting how hedge funds often capitalize on undervalued assets sold off by venture capitalists. Pal predicts that as liquidity improves, institutional investors will increasingly focus on high-utility projects, fueling sustained, long-term growth in the cryptocurrency sector.
Because people sense in the end, however late you come to this thing, you still realize it's the biggest macro opportunity of all time. It's a way of making money. If you think about it, Bitcoin has done 150% annualized returns since 2012, including 3 70% plus drawdowns. 150%. Once you realize that, if you start with some capital, what is the point of even starting a business? I mean, like all of my friends, they'll all be speaking here, Dan Moorhead, Dan Tapiero, all of these guys. We're all macro guys. We all grew up together in the industry. We've all left. Sure, we use macro frameworks to understand this, but none of us trade oil or currencies or whatever anymore. It's irrelevant. It's just the biggest trade we've ever been given. There's a really interesting dynamic. I've got an asset management business called Exponential Age Asset Management, and it's a crypto fund of funds, so it invests in crypto hedge funds. Why am I doing that versus the VC? We will do VC stuff as well in a different vehicle. Why? Is because the VCs get them early, or the early stage investors, like yourself. You get some liquidity and you want to take some profits in some of it. Fine, people like VCs dumping. I mean, look, everyone's incentivized to try and make money. VCs take early risk. I get it. Why people hate it is because the secondary market is too small, right? So if you think of the entire professional capital in crypto, liquid markets, the hedge funds, let's call them those, they manage $8 billion. In traditional markets, it's $4 trillion.
Oh, wow.
So what we've got is a mismatch of liquidity. So these guys are now getting supernormal opportunities because the VCs sell, the tokens dump 60, 70%,
80, 90%.
on the unlocks. If they're good projects, that's the hedge fund's job to go and say, I like that one, I hate that one, pick them up, and then you can actually do it again. Now, retail hasn't figured this out yet because they want to buy it on the news announcement. Hey, Monad's just been launched, I buy and then it dumps. What they should do is wait for the dumps and then say, okay, where's the ruby in the dust here? What can I get? Because then you can make huge money. One of the reasons you're not seeing those super high valuations yet is because liquidity has not been massive. Right? The more liquidity, people earn more money, funds make more money, businesses make more money gets recycled up the risk curve, and people start taking bigger risks. So I think it's still to come, but the VC markets had no exits outside of tokens. There's been no equity exits in any project. We need Circle to go public or get bought. We need some of the, Kraken, we need some of these bigger things to recycle the VC money to then ratchet the whole space up again. And then, as you say, if we've captured a certain amount of liquidity, yes, it's increasing, but then you've sucked a whole bunch into the casino of meme coins, it takes some of that away. Because this entire industry trades on attention. And there's only so many of us in the industry. So let's say there's 1 million active people in the industry. Well, that's 1 million people's attention. And you've got 10,000 tokens launching a day. How much attention can we give to anything? So it really is this game of attention, and memes have got it now because everyone believes that they can make the next 100x. And so utility stuff, layer 2s, nobody cares.
It's sad.
It will come back because we'll have different investors coming to the space and looking for real value. It's just, I think, the nature of where we are. I think the next stage is a lot of the application stuff, the real world assets, the deep in, gaming utility, gaming, it's all to come.
Raoul Pal recently shared a highly optimistic outlook on Solana, a major Ethereum competitor, citing its strong long-term technical setup. According to Pal, Solana has broken out of a descending channel and is now targeting resistance near its all-time high of just above $260, with its current price at $240. He predicts that surpassing this resistance level could lead to significant acceleration in Solana's price movement. Similarly, Pal highlighted Ethereum's potential for a dramatic rally if it breaks above the upper boundary of a symmetrical triangle pattern on the weekly chart, a bullish setup signaling a possible strong upward surge. Ethereum, currently trading at $3,913, could take one of two paths, according to Pal's analysis: a brief pullback to consolidate strength or a direct breakout through resistance. Both Solana and Ethereum are showing technical setups that indicate the potential for explosive growth. Pal underscores the importance of market timing and technical analysis as Solana builds momentum and Ethereum approaches critical resistance, potentially triggering broader market rallies. Investors should watch these assets closely as they near key resistance levels, which could lead to substantial price action in the coming month. Pal's insights emphasize how technical market dynamics, liquidity flows, and strategic market timing can shape investment decisions. What are your thoughts on how these cycles influence your approach to crypto investment? Share your perspective in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.